Hello, this is Jorge Herrera, and I want to discuss today a couple of a couple of issues that a small business owner has to deal with, and they have to juggle too many things. They have to uh, juggle the bills of the rent, the permits, employee retention, healthcare, all those things are the advertising. So it is it is difficult. So and they need also to manage cash flow because the business cycle is variable. Normally, business is extremely strong on the last 2 or 3 months of the year. Then after that, it becomes really very very slow in many cases compared to the ends of the year. So the cash flow is important. And many small business owners also finance some of their customers to increase sales, and that create more stress on the cash flow. So what do? They approach a bank and they take on a line of credit. But a line of credit good, it is because it helps with the cash flow when the business is going good. When the business is growing, when the business is making money, then a line of credit is good because uh, the business owner normally can pay for it with no problem. But when the business goes into hard times, those lines of credit are very treacherous. Why? Because banks require all kind of guarantees, capital guarantees from the business and personal guarantees from the business owner. So when the business goes in difficult times, the bank could actually end in owning the business. So what can a business owner do? There is a great alternative. It's called a dividend paying whole life insurance contract that can be used as an alternate solution to a line of credit with a bank, and it has all kind of benefits. So if you want to learn about that, let's have a conversation. Let's talk, and I explain to you all those advantages. Now, one of the issues that the business owners deal with is also uh, employee retention and the use of or paying for healthcare for the employees for retention. And obviously, the business owner has to take care of his own healthcare for him and his family. So, healthcare insurance, it is extremely expensive. So, a good alternative is a company called Impact Health Sharing. It is not health insurance, but it is healthcare. And it is very affordable compared to health insurance because Impact Health Sharing it is a non-profit solution, and they don't have much overhead. They don't actually have uh, big buildings where they have to pay a lot of on the rent of those locations, and also in the bureaucracy that they have to handle. So health sharing actually uses a software, and it manages the money paid for the claims in a very inexpensive way. So if you want to learn more about that, then let's have a conversation. There is also an opportunity on health sharing for the business owner to actually earn some additional income by sharing. So that's an additional advantage. So let's have a conversation, and I'll tell you. There's also another issue of the business owner, and it is their advertising. If we have a conversation, I can also tell you about a less expensive way to manage your advertising than contracting an advertising firm. So let's have a conversation. I think you'll have a lot to win if we have that conversation. Put a message under the video that you're watching, and we'll have that conversation. Contact me, send me a message, and I'll contact you if you give me a way to contact you. So talk to you next time.